Hello and welcome. You're watching a fresh and new edition of Market Today on Business Today Television. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, the Nifty on Monday, where we saw the trade before yesterday's holiday, gave up all the gains made during the motor trading session on Sunday. And we saw that 19,500 continued to remain a barrier as well. But the big question is, will strong global cues overnight spur the Nifty past these hurdles today? We will find out all of it. But first up, the top headlines this hour. Indian indices are likely to regain their lost mojo as Wall Street sends strong overseas cues. Flattening inflation in the US coupled with dropping bond yields are powerful indicators for a fresh rally on Dalal Street. While cautious mood will prevail on government PSUs as some media reports suggest, the Finance Ministry is now likely to use buoyant market conditions to offload minority equity via OFS in state-owned banks. Very good morning to you, Shail, and thanks a lot for joining in. Well, let's talk about the Nifty first. It has traded in a very, very narrow range, 19,350 to 19,500 now for the last 7 trading sessions. But with the earnings season now coming to a fag end, what are the big triggers for the Nifty?
Good morning, Sakshi, and a very warm welcome to all our guests who've joined in from different parts of the world. It's a beautiful, beautiful morning as far as equities are concerned, Sakshi, and all the goodwill that you had built up into the Nifty is now going to get better and better. I think it's the green shirt and the red tie that I'm wearing that will enthuse bulls to make a comeback on Dalal Street. The most important chart that we'll start today's discussion with is the US 10-year bond yield. There's a sharp fall there, Sakshi, and that's because US inflation data has come in really positive. And that basically triggers a global rally. This is the US 10-year chart in front of you, and this is the lowest level that the yield has seen since September of 25, September 25th, which basically means that now you are at a 2-month low, almost a 2-month low as far as the US 10-year yield is concerned. And that's triggered a very, very sharp reaction, a positive reaction on the Dow Jones Index, the Nasdaq, as also the S&P 500, not to mention the Russell 2000, the small cap index. This sharp rally is now going to translate and reverberate across the world, and Nifty is not going to be an exception. We've seen a very nice rest that we took on Tuesday. So 2 days of positive action on Wall Street will result in a very, very strong gap up on the Nifty today. Now that gap up is likely to be sustained, which basically means that you will open 100, 150 points higher, and then the index will flatten out because we are on T-1, and tomorrow you have the weekly expiry of the Nifty. But very, very strong traction coming in. The only issue that I see as far as the Nifty is concerned, which is now at a 3-week high, is that you just might see the government coming up with a series of OFS on public sector banks where they hold a substantial stake of say above say 70%. And that is a media report that is still not been confirmed by us, but the fact remains that it will be a very strong overhang on the very sharp rally that we've seen. But the fall in the US bond yield, and more importantly the fall in the dollar index, this chart will come in front of you very sharp, very immediately. These two augur really well for very high beta counters like the metal space, like the commodity space, like the chemical space, and to some extent even IT. Sakshi, IT hasn't participated because of very strong interest rates in the US, and once the US 10-year bond yield starts dipping the way that it has, you'll see a very sharp rally coming into the likes of Infosys, the likes of TCS. They have been held back for very long, and now is the time for them to rise and shine, Sakshi.
Absolutely, and let's also focus on the Nifty Bank as well, Shell. I mean, 44,000 mark continues to be an area of resistance for the Nifty Bank as the index has not closed above this level for over a month now. Briefly touched over that level on the Motor trading session, but again slipped a few points lower. So how are you looking at the Nifty Bank and what would you advise traders here?
So, Sakshi, buy the dip. And we are on the weekly expiry of the Bank Nifty today. So a drop in the US bond yield as also a drop in inflation augurs well for Bank Nifty in an indirect fashion, because that will prevent foreigners from selling into private banks. Remember, private banks have been sheer underperformers over the last 1 year, and nothing much has happened except for Axis Bank and Federal Bank. Both of them are near record highs. So with the drop in the bond yield, the drop in the dollar index, you will see an abatement in FII selling, which was the strongest on private sector banks. So you will see that space, taking some kind of breathe. A deep breath is possible there. And private banks are something that I am looking forward to as far as, accompanying them is the IT index. So these are the two sectors that I think will do well because of dropping bond yields and dropping dollar index. As far as the options levels are concerned, 43,700 to 43,500 is a very, very strong support level on the Bank Nifty, and the resistance is now moved up to 44,400. This monthly expiry, you're likely to see 44,500 on the Bank Nifty and somewhere like 19,800 19,750 as far as the Nifty is concerned. So buy the dip on the Nifty definitely, but it's most unlikely that you'll get one. But a move towards 19,450, 19,400 should be caught up with both hands. And now the resistance as far as the Nifty is concerned is 19,600. A very strong move coming in likely on the Nifty IT and the Nifty Bank, which in any case are very, very strong contributors to the Nifty.
Absolutely. Sakshi. Right, so buy the dip, that's the word. On the F&O space, Shell, are there any particular stocks you're watching out for today?
Sakshi, yes, a couple, and all of them in the metal space. Now the problem is that Hindustan Copper is now in the F&O ban. Because of market-wide position limits exceeding 95%. But it's the metal space that will shine and shine very, very brightly. So Hindustan Copper, NMDC, the likes of Steel Authority, Hindalco, simply because the dollar index has seen a very, very sharp downturn, and that will impact commodities in a very positive manner, especially metals. As also, there will be a nice uptick coming on Federal Bank. We were discussing this stock from 143 rupees onwards. This is the strongest stock as far as the technicals are concerned within the Bank Nifty, and a record high is most likely on a Federal Bank on its way up, as also the chemical space. Again related to the commodity space, related to the dollar index. So Navin Fluorine and Deepak Nitrite. These are all, I repeat, technical parameters, option chain analysis, and should you be keen to look at them positively on the long side, please also take another financial advice because these are very volatile times, and data moves or swings in opposite directions fairly quickly. Sakshi.
Absolutely. Let's also briefly look at how the global markets really gave us the handover, on the back of which we're expecting a strong move in today's trading session. So the US markets did have a very good day. The S&P 500 climbed 1.9% in trade. The Nasdaq Composite popped up about 2.4% higher, and it was the best day since April for both these indices as well. The 30 stock index Dow also added 490 points, or 1.4% higher in trade. And like Shell also pointed out, these gains came after October's consumer price index, which is a key inflation metric, came in lower than expectations. It was flat on a month-on-month basis as well. From the European markets, we've also been getting some positive cues. They closed higher on Tuesday as well, after US inflation print for October came in cooler than expected. And Asia Pacific markets also jumped on early Wednesday morning. That's today, taking cues from the Wall Street on the softening inflation front, which boosted hopes that the Federal Reserve may be nearing the end of its interest rate hike hike cycle as well. So you can see Nikkei up 2.2%, Kospi up 2%, Hang Seng 2.5% higher in trade. A very, very strong move coming in, and it's all across the board, Asia Pacific as well. The Gift Nifty also indicating a positive start as well. We'll also keep an eye out on the flows as well, because the FIIs have rather been net sellers. Even on Monday's trading session, about 1244 odd crore rupees were sold from the foreign institutional investors side, but the domestic institutional investors bought about 830 odd crore rupees worth of stocks as well. Shall, we'll wait for our guest to join in the meanwhile. All right, I think Avinash is with us, so let us quickly go through him. Avinash Gorakshakar is with us, Director Research at Profit Mart Securities. Very good morning to you, Avinash, and thank you so much for taking the time out for this discussion. The first question would largely be on how the global markets have popped up on the back of lower inflation, and what does it mean as fresh triggers for the Indian markets, especially do you think that the overhang of rate hike cycle is now fairly behind us?
Yeah, good morning, Sakshi. Good morning, Shail. See, my guess is that lower interest rates definitely are now on the cards. Looking at the kind of inflation numbers, I think this is good news not only for the US markets but even markets like India, because whenever interest rates get start getting benign and they start correcting, I think markets obviously are happy that lower interest rates would mean better earnings growth from most of the corporates. My sense is that even in India, I think inflation has peaked out, and we could see possibly some good news from the RBI governor in the coming days. Overall, I think this trajectory needs to be maintained. The target for US is obviously 2%, which is still some time far away. But I think at least one good part is that the Fed would now refrain from increasing interest rates, which in itself is a big positive. So I think we have seen yesterday the Dow, the Nasdaq moving up quite sharply. So I think that obviously rubber effect will be felt in the markets today. We could be seeing a gap up opening today. My guess is that all the interest rate sensitive stocks, specifically stocks like autos, auto components, capital goods, real estate, wherever interest is a large part of their top line, as a percentage of the cost, I think that would definitely benefit significantly. That would obviously result in better earnings growth for most of the companies operating in these sectors. So I think net it's a good positive. I think we need to monitor the inflation numbers at least for the next 3 to 4 months, and then we could rightfully say that interest rates are headed southwards.
Good morning, Avinash, and a very warm welcome to you on Business Today television. What a wonderful day to have your presence on Market Today. Where do you see value at this point of time, given the trajectory of the markets from now on?
Shell, we are positive on real estate and automobiles, and within the real estate basket, we like a company called Anant Raj Limited. Now, the reason why we like this company is basically because apart from the cash cow real estate business, they operate in Gurgaon, where they have a land bank of almost 150 acres. Most importantly, the real estate business is growing steadily. Last year, the top line for this company was roughly about 1,000 crores with a profit after tax of 150 crores. In the current 6 months of financial year FY24, they have already recorded a profit of 110 crores. And the better news is that already Anant Raj has invested a lot of money, capital in the data center business. Now, data center business is a futuristic, opportunistic kind of market, where they have built a installed capacity of almost 300 megawatts. Recently, they have operationalized 6 megawatt, and the game plan by the company management is that by March 24, 21 megawatts would be operationalized. I think by next year we could see a top line of at least 250 to 300 crores coming in purely from the data center business. And in terms of the current year profitability, we expect a bottom line of around 230 to 240 crores compared to 150 crores last year. So earnings growth over the next 2 years is going to be very solid. So here, we have been advising our clients to actually buy at the current odd levels. We expect a target price of around 350. The other stock is basically Tata Motors, which we feel is going to be benefited by two things. One is the increased interest in electric vehicles, where the company holds a market share of almost 40%. Plus, JLR has now come back into top gear. We've seen that free cash flow has started getting generated. The management is also pretty confident. And in the very short term, on November 22nd, we'll be having Tata Technologies IPO, where a lot of value unlocking would come in for Tata Motors. So I think looking at the fact that Tata Motors DVRs has also been included in the MSCI index, that also could be a short-term trigger for the stock. We are looking at a target price of 750 over the next 12 to 15 months.
Okay. Um, Interestingly, Avinash, you talked about Tata Motors, and Tata Motors is also one of the stocks that's now got included in the MSCI index as well. And there's another trigger, and that is that we are now hoping for the Tata Tech IPO to start open for subscription on November 22nd. That could be an added-on trigger. How would you look at Tata Motors in that context now? What kind of incremental, positive moves can we expect with this IPO coming in? Already Tata Motors is selling a part of the shares in this IPO.
No, I think one is the value unlocking which takes place via the IPO, Sakshi. But the second part is when Tata Technologies as an entity gets listed, a lot of value unlocking will get reflected in the coming quarters because in terms of the positioning of Tata Technologies, it's got a large market share in the international market. It does a lot of work for JLR plus other, corporates. So my sense is that, the IPO price could range anywhere between 500 to 600 rupees, but post listing, the value unlocking would be quite significant because Tata Motors would continue to hold it as a subsidiary. And my sense is that this would obviously add a lot of glitter and shine to the Tata Motors share. And of course, the inclusion of Tata Motors in the MSCI index is also a big positive. That would also result in a lot of FI inflows in the stock because this index is very, regularly monitored by most of the FI investors. So I think to some extent in the near term, there could be a short-term trigger for the stock. But I think the markets are quite happy that the core business, the JLR business, is now running very well, and we could see very strong numbers even for the third quarter of this financial year.
Right. Avinash, how are you understanding the rally that you've seen in the PSU banking basket, especially on Monday, against the background that government might move towards an OFS in many of the public sector banks where they have huge stakes. Of course, these are still unconfirmed remotes, but the fact is that sentiment immediately gets impacted with such news.
So I think, Shail, my guess is that these are unconfirmed reports. But if you look at the valuations of most of the larger PSU banks like State Bank of India, Bank of Baroda, Canara Bank, I think these banks were going nowhere
Excuse me.
despite numbers. In fact, even the private sector banks were lackluster. But if you look at the commentary from the SBI management or maybe from the Canara Bank management, I think one thing is very clear that they expect this credit growth cycle to be very strong in double digits to continue, and the second half traditionally has been a very strong period for most of the banks. So my guess is that at least on operational metric numbers, SBI looks pretty attractive. Even Canara Bank, along with its subsidiary Canfin Homes, has done pretty well. Bank of Baroda also, despite the hiccup in the online app, kind of issue, has reported very strong numbers. So my guess is that despite the OFS, there's been a kind of a renewed interest purely on valuations, and I think markets had ignored this, pocket largely because people were worried that credit growth could come off, net interest margins could come down. But I think looking at the capex cycle, looking at the retail demand and the festive kind of demand which has come in the last few months, my guess is that some amount of value buying has started coming in, and I think we could see better numbers, in fact, for the third and the fourth quarter. So, OFS would obviously be initial short-term negative. But I think after the OFS is complete, I think market should again focus on the earnings, which I think is not bad considering the fact that valuations are quite comfortable.
Okay. Avinash, I wanted your view on the IT space now. Given the background of the falling US yields, I wanted to understand from you where would you be now looking at positively in the top line IT names, which until this somewhat have not really performed very well, but do you think tide turning for them?
No, I think clearly IT is in a little bit of a challenging kind of period. Despite the fact that these are asset-light businesses, have a lot of cash on the books, I think what the market is looking at is basically strong earnings growth, and for that, probably we'll have to wait for at least another couple of quarters because headwinds from the European markets, from the US market, still continue to be challenging. In fact, many companies have said that they have got large order books, but execution is going to be a challenge. The same thing was communicated, in a case of TCS. Infosys cut down its guidance. Even HCL Tech has cut down its guidance. So my guess is that the third quarter traditionally is a softer quarter. We'll have to wait for how the companies perform in the Jan to March quarter. And typically, if one were to even look at IT companies, I would be more comfortable on TCS, which has got a large diversified basket of clients. So any dip in the price or even at the current level, somebody who's got a 12 to 18 months view can definitely chip in and buy at current levels.
Okay.
Right. Uh, Avinashi, let's look at the mid cap and the small cap space. Of course, you'll see a very, very strong tailwind coming in from the US markets. The Russell 2000 index, their version of the small cap, was up 5% yesterday. Where do you see value given the fact that mid cap and small cap indices in India are still at record levels, but the participation from the retail side remains immense?
No, I think Shell within the small cap, mid cap, sectors. I think my guess is domestic facing sectors will continue to do well, and I think the smaller cement companies, typically capital goods companies, auto component companies. We are finding on ground activity to be very robust. In fact, most of the companies have reported very strong numbers. Some examples from the capital goods space could be companies like Action Construction. Typically, from the cement, we like Orient Cement. Typically, even companies like Heidelberg Cement. And most importantly, from the auto component space, we feel that there are a lot of companies which are interlinked with some of the larger sectors like commercial vehicles. I mean, companies like Jamna Auto, Sundaram Fasteners. These are pockets of opportunities where volume growth as well as value growth is going to be quite significant. So I think one could take a small pick and choose approach, but yes, definitely, I think domestic facing sectors will do better. The export oriented sectors, specifically metals and IT, would be finding headwinds continuing for a long time.
Okay. Avinash, let's focus on a few more stocks that have got included in the MSCI index rejig. IndusInd Bank, Paytm, we have APL Apollo Tubes, Persistent Systems, Polycab, Macrotech Developers, Suzlon Energy. These are some of the stocks that have now got included. Any of these stocks that interest you after the rejig?
I think within the IT space, persistent system looks pretty attractive because this is one player which has got a large product base also, has been doing pretty well despite challenging headwinds in the IT space. And I think within the real estate space, I think, Loda looks pretty interesting because it's a large player in the Mumbai market, has been showing very strong traction in new, project launches. As far as Paytm is also concerned, I think Paytm is also now slowly getting into profitability kind of gear. And my
Mm-hmm.
sense is that over the next, say, 1 or 2 quarters, as the management has predicted that by next September, they are hopeful that the company would become EBITDA positive. So I think these are interesting bets which I think investors could look at. Obviously, look at these stocks, whenever the market corrects, because today, the market may open gap up. So, I mean, buying these stocks at higher levels would not be the right thing.
Okay. Okay. Understood. Right. Let's focus on a few more stocks then and understand from you where exactly should investors be really looking at. A lot of names are now coming up as far as the stocks and news is also concerned. Let's talk about Hindalco, for example. The company is going to be setting up an extrusion plant to make aluminium train bogies in India, and that's going to be a positive news. Again, for PVR Inox, that's going to be an interesting one to watch. Tiger 3 has hit 100 crores collections in 2 days again, so that's one I'm watching out for. Then let's also talk about Federal Bank. Its subsidiary has got SEBI's approval to come up with an IPO, Fed Bank Financial Services. Let's also talk about IDFC First Bank. It's got PFRDA nod for the merger of IDFC and IDFC Financial Holding with IDFC First Bank as well. Any of these stocks that you may be watching out for, Avinash?
So I think within the banking space, as you rightly mentioned, that IDFC First Bank has got approval for the reverse merger of IDFC with IDFC First Bank. This is definitely a big positive. Secondly, Federal Bank, looking at dilution of its subsidiary, Federal Bank Services, that is also another positive for Federal Bank because that would unlock a lot of value for Federal Bank on a standalone basis. And most importantly, I think news flows like Hindalco getting into aluminium, railway wagons is also a big positive. I think they would obviously address a large domestic opportunity. The wagon market in India anyway is a very concentrated market, and typically we've got players like Texmaco who actually services the wagon market. We've got BEML also doing that. So I think that would obviously add to the margins, but earnings are still a long way. The bigger issue for Hindalco is obviously global metal prices, which still continue to be quite challenging. So I think all said and done, these two, three companies look interesting even at the current oil levels.
Right. We'll wait for the pre-open markets to give us their first tick, but it's going to be a blowout today. Sakshi, nearly a 200-point gap up is what the GIFT Nifty is predicting as far as today's opening trades are concerned, and that will trigger a very, very strong bout of short covering on both the Nifty and the Bank Nifty, which in turn will help the index on its way up. We are waiting for Milin Vasudev to join us. And then we'll discuss technical picks. But for the moment, the mood looks extremely robust. We are just somewhere about a minute away from pre-open trades, and let's see how the Nifty opens. The GIFT Nifty's numbers are fairly good. Let's look at a 200-point gap up and then maybe a flat trade for the rest of the day. Remember, while we were at it on Monday, we had discussed the 19,400 call as far as Nifty's 16th November expiry was concerned, and we'll keep an eye on it. That one is supposed to do dramatically well. The price was 103, I remember correctly. Let's see how it opens today, and at open it will be an immediate profit booking. Okay, ladies and gentlemen, we have the pre-open trades, and they are nowhere like what the GIFT Nifty suggested, but give it a couple of seconds to it settle down. Nifty is opened in negative territory, but now is very quickly moving towards the green sign, and yes, here it is. 33 points higher. Remember, this number will improve dramatically. Nevertheless, let's look at sectors. Let's look at stocks that are moving substantially higher. I'm very interested in IT and banks today. 2% up on Axis Bank, 1045. Infosys 1397, up 1.7%. Tata Motors, which is the pick that Avinash suggested, 1.6% higher, 664. I want to see what Reliance is doing. At the moment in negative territory, 2271. Let's concentrate on the good parts. The Nifty is now galloping ahead, 92 points higher, 19,538. Let's look at stocks which are minus the index heavyweights and in the FNO zone. Let's look at those stocks which are sporting some smart gains. Manappuram Finance, 9% higher on the back of strong earnings, 154.35. SBI Card 2.2% higher, 770. Bajaj Auto and Aurobindo Pharma are up to 2.5%. Coal India resumes its upward journey again, 4% higher, 364. So it's the PSUs which are showing very strong traction in initial trades. India Bulls Housing Finance 3.5% higher, 182. Remember, this is also one of the stocks which is in the ban. Let's look at NSE 500 and look at top gainers. We've discussed Manappuram. Natco is trading 8% higher, 855. We have CAMS 4% higher, 2799. We have Biocon 2% higher, 232. We'll wait for the trades to settle further and for Milin to join us, but it gets better and better on the Nifty, Sakshi. 125 points higher, 19,572. My understanding is that we'll sort of settle at 19,600 as far as the pre-open trades are concerned. Still 4 or 5 minutes left so far. Let's look at the PSU basket. Let's look at stocks that are creating dhamal there. Coal India 4% higher, RVNL it's won a big order, 2.6% higher, 161. You have NTPC, Moil and Rights up between 1.6 and 2.1%. Milin is with us, Senior Technical Analyst at Arihant Capital. Milin Vasudev joins us. A very good day to welcome you, Milin. Festive greetings. How do you see the Nifty now on this very strong bout of short covering, and one or two trades that you can highlight on the technical side?
Good morning, Shail. Festive greeting you and for your viewers. Now, first of all, I would like to comment about Nifty. See, we are already trading below the 50-day falling 50-day moving average line, which is at a 19,575 level. Now, at present, we are very close to that level because HGX GIFT Nifty is pointing on the higher side. So, our take is that once Nifty would start trading above 19,570 for two consecutive trading sessions, then yes, you could see some kind of a short covering, which could lead Nifty towards, say, somewhere around, say, 19,800, 19,000, even it will go very close to the all-time high. So, yes, one should trade with positive bias in this market. And on the stock front today, I'm recommending two stocks. One is Moil, which is currently trading at 268, keep a stop loss of 240 and a target price of 310 and 330. Now, if you see the Moil charts, now nearly a 13 years high it is crossing. So there is a strong case that this stock is likely to head and higher and would give fantastic return going forward. Similar, I'm recommending a stock called NCC, currently trading at 165. One can keep a stop loss of 155 and target would be 185 and 195 going forward.
Okay, so these are two stock recommendations. Very good morning to you, Mileen. Thanks a lot for joining in. Tell us your outlook on Axis Bank also, in case you're looking at the current levels on Axis Bank. The stock has come in focus again. In today's trading, the pre-opening levels, it's 2% higher at 1,045 odd levels as well. Anything that you spot a trade here?
See, if you see, Axis Bank is clearly an outperformer. It is outperforming the benchmark indices, and yes, it is now very close to its all-time high.
Yeah.
And once it crosses the level of say. Once it crosses the level of 1,050, you could see some good move coming in this counter, and this could lead this counter to test the levels of say 1,075 to 1,080 levels. So on lower side, one can accumulate these stocks.
Okay. 1,051 currently, so all-time high levels.
640.
Yes, Shail.
It is 40.
1,000. It's 19,640 on the Nifty, Sakshi, and a 200-point gap up. I think it's going to be a severe beating that bears will take on the entire option chain of Nifty. Remember, tomorrow is tomorrow is the weekly expiry for the Nifty, and today the one on Bank Nifty. Anything within the Nifty, Mileen, what would be the strongest stock on technical and options charts for you?
See, we are very bullish on Canara Bank. If you see, Canara Bank is clearly given a weekly breakout on day before yesterday's trading session. That's a clear winner. Now, one can see that it is forming nearly an accumulation pattern, or you can say a small cup and handle pattern on the daily chart. And looking at the current price action, we expect this stock to test the levels of say 420 to 430 levels going forward.
Right. Mileen, I also wanted to take your view on Coal India as well. The energy basket has got a fresh flavor again, and Coal India shares did end at 8-year high levels on Monday's trading session too. Your own sense of how would you be trading the stock at 359 odd levels in the pre-opening level?
See, currently, if you check the daily chart, it is making clearly an higher top, higher bottom formation. Even the momentum indicators are positively poised. But at current levels, the risk reward ratio is not in the favor. But still, if aggressive traders want to trade in this stock, one can keep a stop loss of 320 on the higher side. If it crosses 300 and say 65 levels, then yes, you could see the levels of 380 and 390 going forward.
Right. Okay. Another stock that I wanted to take up with both of you, Avinash and Mileen, is Bombay Stock Exchange with the kind of fresh, rally that we've seen here, a stunning move in the recent past. I mean, like just in the past 5 days alone, a 27, 28% of a surge is what we've already seen. In the last 1 month, a 60% move at 2379. How would you be looking at BSE, and would you, advise investors to chase the momentum, or just, stay cautious at this point in time? Mileen, starting with you.
See, currently, if I open the yearly chart now, current year it has already moved up by 336%. If you see, the risk reward ratio is not favor in the chart, and still, if aggressive traders are changing this momentum, then they have to keep a very strict stop loss of 2032 on the lower side. Yes, you could expect a move towards say 2500, 2600, but yes, keep a strict stop loss of 2032 levels.
Shail? All right.
Yes,
Avinash?
Sakshi, let's get Avinash's view on the Bombay Stock Exchange as also CDSL. Avinash, obviously the broad contours of the rally that is coming into these counters is fairly well known. How are you looking at both these stocks after the sharp run up?
I think, Shail, as rightly pointed out by Milind, I think the risk reward now at the current level looks a little limited, considering the fact that now valuations have become slightly expensive. And let me tell you one thing, that the reason why BSE is going up is because there are very little choices available in the market. I think NSE is yet got to get listed, and BSE is the only available proxy which is available as far as the capital are concerned. I think we'll have to wait and watch for some time, but I think really it seems to be a little expensive now. So at best, it's a hold. And CDSL also, looking at the trajectory in the number of accounts which have been added, they added about 80 lakh accounts in the quarter 2. So I would believe that here also, I think it's going to be a steady rise in terms of revenue and profit. The markets are obviously very excited, but earnings growth, my sense is going to be moderated. So both these stocks are a hold. Fresh buying should be avoided.
Okay, both these stocks are a hold, but fresh buying is advised to be avoided, and caution is clearly advised after the stunning rally that we've seen on BSE and CDSL. Mileen, your thought on Nifty IT now. How would you be trading the index? Right now in the pre-opening session, 1.5% higher, the top gaining index on the back of positive triggers, of course, bond yields, and of course, positive cues coming in from the global cues.
See, clearly, if you see Nifty IT index has taken a good support at the 200-day moving average line, and then the Nifty index made a higher high formation on the daily chart. And today, if it crosses the levels of 31,052, then you could see a confirmation of a higher top, higher bottom formation, and this could lead IT sector to test the levels of 31784. So we are working out with the levels of 31784.
Okay. Sakshi, we'll just pay attention to pre-open trades. Nifty settled at 19,651 and it's a blowout, 207 points higher. It basically means that R1, R2, R3 and R4, all 4 resistances have been taken out by the Nifty. And at 19,651, you will see a lot of short covering happening in the money calls, which is 19,400, 300, 200, even 100. So it's a very, very good day for the bulls as far as T-1 is concerned on the Nifty. And it basically means that the bears are likely to get a walloping of a lifetime Given the fact that we have a weekly expiry tomorrow, let's see how it pans up. But the trade is done for the day, Sakshi. You'll see a 200-point gap up, and then from then on, the index will turn sideways. Coming back to Milene, within the metal space, Milene, you've highlighted manganese ore, but that's on the extraction side. Anything in the main metal space, whether it is steel or aluminium, would you prefer on the long side as far as charts are concerned?
See, one more stock is called Hind Copper. If you see on the Monday's trading session, there was a huge price activity with huge volume. That clearly suggests that there is a buying interest in this counter. One can accumulate this stock in the range of, say, somewhere around currently it is trading at 164, but can accumulate at the range of 164 to 160. Keep a strict stop loss of 150 on the higher side. Yes, you could expect the stock to test the levels of 180, 190 to an outer extent of 200 in couple of weeks time.
Okay, 164 currently for Hind Copper, but the stock has been included in the F&O ban as the open interest in the F&O contracts has touched 96.3%, and the ban could be lifted soon as it falls below the level as well. Let's look at some more stock, especially small cap index is something that I wanted to touch base with you, Milene, first. The small caps have definitely been the outperformers of the previous somewhat, and they continue to soar higher in trades. The Nifty small cap 100 index is up 1.2%. Anything from the small cap space that still looks valuable to you?
See, there are a host of stocks in small cap which are looking good. If you see the index, it is clearly outperforming all the index, and it is trading at all-time high. That shows that there is a lot of steam in small cap counters. Then, if you see, there are stocks like I would say I have got some list like Axis, CAD, Hind Copper, then PTC, Quick Hill. These are some stocks which are looking good from the small cap sector.
Okay.
Okay, ladies and gentlemen, we have the first trades, and you will see a very, very strong bout of profit booking happening as far as the initial trades are concerned. All those people who had carried Nifty calls on the long side are now booking extensive and huge profit. Nifty at 19,580, up 138. It's the IT index that's taking it away, 1.2% higher, 31,025. Remember, it was a very, very sharp underperformer, and a cut in bond yields, a cut in interest rates are best reflected on the Nifty IT index. The Bank Nifty on its weekly expiry day, 364 points higher, 44,251. Now let us see the prices that are ticking within the index heavyweights. I just want to watch what Axis Bank is doing. Let's see this particular stock. Axis Bank at the moment is trading 0.9% higher, 1,034. Let's look at HDFC Bank, 1% higher, 1502. Let's look at Reliance at 2332. It's up 0.7%. And how about Infosys, 1.67% higher, 1396. A very, very strong move coming in, Sakshi, from the initial trades. All 10 index heavyweights are at their day's high, and I want to check the advanced decline ratio on the Nifty, 48:2. Unlikely to get anything better from here, Sakshi. So this gap up will now turn sideways. At the moment, at R4 19610, it's the short covering now which has started happening. F&O stocks immediately. Mannapuram Finance, blowout performance, 8% higher post earnings, 151.50. Emphasis 4.5% higher, 22.50. Hindalco taking it away, 3.6% higher, 505. Let's look at the stocks that our technical analyst has suggested. I want to see what Moil is doing. At the moment, let's see what Moil is up to. 268. Oh, okay, it's in negative territory. Let's see how this one takes up. And the second one he mentioned was NCC. Let's look at what NCC is doing. At the moment, NCC is right there in front of you on the screen. 165, 0.3% higher. Very, very strong moves coming in. Let's look at the list of new highs immediately and then start looking at trades. Okay, Oberoi Realty, Persistent, Bajaj Auto, Federal Bank, TVS Motors, Trent and MCX. These are the names that we've already discussed many, many times. And Persistent, this is something that Avinash had pointed out. Fresh record high, 6348 in front of me. A lot of smart deals happening here. Coming to Milleen. Milleen, the Nifty looks a little overheated. Any of the private sector banks that you'd like to take a punt on the long side?
On the private sector bank only, I'm waiting for a good move in Canara Bank. We are very positive in Canara Bank. So at present, I would look for Canara Bank because there could be a good move in Canara Bank, which could lead Canara Bank towards 420 levels. So we have given this call on Monday's trading session.
Let me just talk about a few stocks that I've
Fair
tracked.
point. Sakshi, what are you looking at?
Trident Shell. Trident has shot up in the opening session again. It's 6% higher, 38.7%. Narayana Health, Narayana Hrudlale, after the earnings, is seeing a sharp move as well, about a 5-6% higher for this one as well. And the other stock is CAMS that we have been discussing over the last few trading sessions as well, 5% higher, the topmost moving stock in the Nifty 500 basket. Avinash, let me bring you in the conversation. From these three stocks, anything that you like at this point in time?
I think Narayana Hrudlale, came out with a very strong set of numbers. I think we could expect some further re-rating here because not only has the hospital recorded high utilization rates, the per bed, realizations have also improved. And I think looking at its expansion, Sakshi, I think you could see further re-rating in Narayana Hrudlale. Obviously, the markets are looking at all the hospital stocks with a good amount of positivity, considering the kind of specialized activities they do. So I think one could look at accumulating even the stock at the current odd levels. We could look at a target price of around 1300 to 1350 in the next, say, 12 to 15 months.
Okay.
Sakshi, we look at the Nifty PSU Banking Index, 5247 in front of you, 1.3% higher. We track 19 indices, ladies and gentlemen. All 19 of them are in very, very sharp uptrend. On the Nifty 500, it's the widest index that we have, and 471 stocks are in the green. As far as the broader advanced decline ratios are concerned, 1642 shares on the National Stock Exchange are in the green, compared with just 130 that are in the red. So it's a blowout that has happened. Let me just look at the options chain of the Nifty and mark out the 19400 call that we had discussed on Monday. The 19400 call, ladies and gentlemen, is now 222 rupees. It's almost doubled in price from the 103 that we had marked on Monday. So that's how options trades work. And Sakshi, it's a blowout that's happening on many stocks. Let's touch base with Milleen again and throw him the IT space. Coforge, Emphasis, both of them are in the green and moving very sharply. Although these are high ticket items, Milleen, anything that catches your fancy in the IT space? This has been beaten down very substantially, now making a comeback.
Yes, Shell rightly pointed out that Emphasis have it made a high of 2545 on 11 October, and from there, from 13 trading session, it came down, tested the 200-day moving average line at 2097 level, and from there it made a higher bottom at say 2144, and today it has confirmed the higher bottom, which clearly suggests that this stock has got more upside going forward. Even the momentum indicators are positively poised. One can look for the target price for Emphasis would be somewhere around 2300 to 2342 levels going forward.
Okay. Avinash, I'd like to bring you in as ask you on the metals pack. You did talk about Hindalco. Now we are moving, Hindalco is moving 4.5% higher in trade. We also have JSW Steel, that's 1.5% up. Tata Steel is 1.2% higher. Most of Nalco is up in the FNO space. It's 2.6%, 3% higher in the FNO action as well. The entire metals pack, how are you looking at it? Any stocks that you would like to highlight here?
No, I think my guess is the metal pack definitely has bounced back, but one needs to understand how sustainable this is. At least in case of companies within this space, we like Tata Steel and Steel Authority of India. In fact, Steel Authority of India came out with a very robust set of numbers, which were much ahead of the street estimates. They've also reduced significant amount of debt on the books. Tata Steel also, I believe, has ensured that a lot of debt on the books has come down. So, in this uptrend cycle, obviously companies which have reduced debt are going to benefit significantly as compared to others. So I think, Tata Steel and SAIL could be good, bets in this sector, considering that there are still some headwinds here. But I think these two companies can give a decent risk reward over the next, say, 6 to 12 months.
Okay. Milene, your thoughts on the metal pack? Anything that you like here?
Clearly, you pointed out one stock called Hindalco. Yes, Hindalco is making accumulation pattern on the weekly chart. Now, it has come out from the consolidation pattern. Last 7 weeks, it was been consolidating in a range, and today it has given a breakout. Though it is today up by 5%, one can wait for some dip in this counter. On the higher side, this stock is likely to test the levels of 520, 540 in couple of weeks' time.
Okay. Sakshi, two stocks I'll point out which are showing very, very strong technical trends. Milene, stay with us. National Aluminium, 3.5% higher. A very, very strong tailwind coming in. High beta, low ticket. This is something that needs to be looked at. Your views, Milene, on National Aluminium?
Shall where it actually I'm not getting the graph of National Aluminium. It is slightly perforated, so
Okay.
I could not comment on it.
Not a problem. No issues. The stock is up 2.8%, and Sakshi, a very, very strong bout of short covering is happening here, which is seen in the decrease in open interest. So this is something that traders can look into, and of course now at a 2.5 week high. And the other stock is Indian Bank. I'm just wondering, Milene, if you can draw the chart of Indian Bank. Very strong move again on this side, 462. Yes, I think we have a record high on Indian Bank. One of those rare counters in the PSU banking sector, showing a very strong up move. Milene, would you be chasing Indian Bank?
Yes, definitely. If you see on the daily chart, nearly 20 days of consolidation on Monday's trading session, we saw good price and volume action in this stock. Net currently trading at 460. It has got a good support at around 450, 440 levels. Keep a stop loss of 435 on the lower side. On the higher side, you could expect this stock to test the levels of say 480 to 495 in couple of weeks' time.
Okay. Right. I'll also look at Poonawalla FinCorp. Let's look at this stock as well. The stock has been in an upward trend, and even now it's up by 1.1%, 398 odd levels currently. Last 5 days, again, a 6% surge is what we've seen. And in the last 6 months, a 20% upward move is what we've already marked on Poonawalla FinCorp. Avinash, your view on the stock?
I think numbers, have come out very robust, and I think looking at the kind of growth in the second half and the business commentary coming from the company management, I would not be surprised that we could see some further re-rating here. I think the stock had consolidated for some time, but I think now with the festive activities in full gear and the second half disbursements are expected to be much stronger than the first half, I would not be surprised we could see some further re-rating. So I think investors should hold on, wait for some really corrective action here if one needs to add here. I think around 370, 375 would be a good level to add if the price corrects But otherwise, I think long-term prospects continue to be pretty solid here.
Okay. Another stock that Avinash I wanted you to look at is Ethos. The stock listed last year. It listed at a discount of 6% odd at 825 odd levels, and currently very interesting move coming in on this one. The stock is up 6-7% odd in today's trading session, and 2065 levels can actually be seen. Last 1 month's move has been spectacular on the stock as well. A sharp 30-40% move, 60% move is what we've seen in the past month alone. Your own thoughts of the kind of move that we've seen on Ethos?
No, I think see, Ethos is a company which operates in the luxury watch segment,
Yeah.
and in a lean season, Sakshi, they have done pretty well. In fact, the quarter 2 numbers which have come out are typically a lean period because the second half traditionally is a very strong period for Ethos. My sense is that the second half would be significantly better than the first half, and I think the markets are quite excited, considering the fact that the company is rapidly increasing its retail reach and the kind of product category. So I think even at the current odd levels, there could be a lot of good buying, provided the momentum continues. But second half is definitely going to be better. So I think investors should definitely hang on here. They could expect reasonably good upsides, say around 23, 2400 over the next say, 6 to 12 months.
All right. We're at 928, Sakshi. The markets are showing all signs of consolidating further in an uptick. Nifty at 19,620, 176 points higher. Nifty IT at 525 points higher, 31,161. Let's touch base with Milene. Milene, given the strength in the market and the fact that first 14-15 minutes have passed peacefully, is this a right time to look at the 19,600 call on the long side, or has the gravy been taken out?
See, Shell, it would be very difficult to tell at current juncture because we had a very sharp up move going for. And we have seen a gap up of nearly 200 points. So there is you have to wait another 15 minutes to take a call on it. But on a decline, one can definitely look in and can take a say bull spread call over here for say next week, because I'm not so expert in F&O, but definitely you could look for 19,600 bull call spread.
Right. So the 19,400 call that we had discussed in trade on Monday at about 103 rupees has now moved up further. It's at 223. So a very sharp move is now coming on the Nifty, Sakshi. The fourth resistance has been tested actually on the low side, which is 19,620, and the index has now started inching up higher. Let's look at the stocks that are contributing to this sharp uptrend within the index heavyweight space. It's of course Axis Bank, which is the top gainer, but now that move has been taken over by Infosys. Milene, Infosys for you at 1357, I think there hasn't been much of a rally on this particular counter. Let me just draw the chart. Yes, 1394 in cash. Let's look at the option trade on Nifty. I'll look at that call, Milene, but meantime, will you offer a technical view on Infosys?
See, on Infosys, if you see Infosys chart clearly, the 200-day moving average line is falling and it is facing strong resistance over there currently. So I would say that there is a strong resistance for Infosys at say somewhere around 14 not 5 to 1410 levels. If that level is being broken, then only some good move uptick can come in this stock, which could lead the stock towards say 1420, 1438 levels. But at present, a gap up definitely indicates that there is some positive move in this stock. But wait for 1410 to be crossed and then take a call in Infosys.
Okay. Right. Milleen, it's a day that also belongs to all the banks, like we were discussing in the pre-opening session as well. It's PSU banks, private banks, financial services, Nifty Bank. They're all moving up in trade, especially I wanted you to, to talk about IndusInd Bank. Now, this stock is hovering near its 52-week high levels. It's up by 1.1% odd as well. Your own sense of how would you really look at IndusInd Bank versus the other private majors like Axis Bank we discussed before?
See, clearly, IndusInd Bank is making a strong move on the higher side. Yes, from current level, I could expect some, say, 7 to 8% move from current level. So keep a stop loss of, say, 1418 on the lower side, and on the higher side, you could expect a stock to move towards, say, somewhere around 1540 to 1560 levels.
Okay. And from the PSU banking basket, you discussed Indian Bank and Canara Bank. Anything else that looks positive to you from the PSU banking basket?
Yeah, if you see even State Bank of India, it is not giving any clear move. But definitely, if you see in this pack, only Canara Bank and Bank of Baroda are the two stocks which looks good. But I would bet on Canara Bank only.
Canara Bank only. Okay.
Fair. Let's look at an options trade, and the PCR will fire the Nifty, the Infosys 1400 call for you on the screen. At the moment, it's trading somewhere like 1755. Although it's opened a gap up of about 6 rupees, but this is an interesting trade on the long side. Why I mentioned this is that somewhere on 11th of October, this call was trading at about 128 rupees, now available at 17. So possibly a good swing in the making, given the rally that we are seeing on the IT space, both on the index level and on mid cap IT. So this is something that you can keep on record on your radar, and should you see a mild dip towards 14 rupees, 15 rupees, this is something, of course, you should be looking at. If you look at it's 9:34, let's make a 15-minute candle on this one, and the 15-minute candle on this one shows the highest volumes that we've seen in more than 7 or 8 trading session. So that itself speaks of a volume and a price breakout coming in. Sakshi, the other set of stocks that we'll mark is the brokerage come demat counters. So we'll look at Angel One, we'll look at Share India, CDSL, Bombay Stock Exchange, and of course CAMS. These are the spaces that are doing extremely well on the markets, and no technical views taken in because they are extremely overheated. But that is the trade that is doing fairly well in the market, and CDSL is something that you should have gone into somewhere like 1400. For those who have joined us earlier as well, it was Ashish Chaturmota's top Muhurat pick, and it's done fantastically well from those levels. Sakshi.
Right. Milleen, let's focus on the railway pack. RVNL has moved up in trade. We were discussing in the pre-opening session that the company has got an order as well. Your own sense from the railway space, would you look at this stock positively, or is there anything else that interests you from the railway pack?
See, RVNL is, if you see on the daily chart clearly, it has made a very dynamic move from, say, 130 levels to 199. And from there, it has gone into a solid, strong consolidation. At present, yes, RVNL has got some resistance at higher side, say somewhere around 170 levels. Now, if that level is being crossed with good volumes, then you could expect that again 190 level could be tested, and it could head higher towards 200 to 210 levels.
Okay, got that. Again, one more area that I wanted to draw your attention. Paytm is one stock that I wanted to discuss with you. The stock has got included in the MSCI index as well, and in this entire new age internet stocks space as well. Anything that is looking promising to you on the charts now?
So I'll rather comment on Paytm now. Last 4 weeks, it is just making lower lows. And now today, it has taken a good support at the 50-day moving average line. Even the volumes have started picking up because of this gap up trading session. Now, initially, this stock has got somewhere a resistance at 1925 to 1930 levels. Again, once that level is being crossed, then yes, you could expect a good move towards say 1900 and 950 to 970 levels. So one can keep a strict stop loss of say somewhere around 900 and 900 levels. On the higher side, you could expect 950 to 960 in couple of days time.
Okay, Sakshi, we'll mark two large cap stocks. One is, of course, Ultratech Cement. It's just a blowout that's also happening on India's largest cement producer. While it's a very high ticket item and it moves in a very slow pace, but a very nice technical view will come in from Milleen. We've seen a breakout at the current price. This was the last seen on 15th of September. So a 2-month high on Ultratech Cement, which of course is also the all-time high. Milleen, your views on Ultratech?
See, Shell, if you see the longer term charts now, currently for this year, Ultratech Cement has moved up by 26%. And now 2 years of consolidation, it is coming out from the 2 years of consolidation. Last year, it was not a good stock to buy, but yes, this year it has made a good sharp move and it has come to all-time high also. One can keep a stop loss of say 8653 levels on the lower side. On the higher side, you could say 9,000, 9,200 to an outer extent of 9,500 could be tested in this stock.
Fair point. And remember, these are index heavyweights and blue chips. When they start moving, they do so with a sharp burst and then they lie dormant over a long period of time. So with the due checks and balances, you need to look at Ultratech Cement. And Sakshi, of course, Milleen is here. How can we forget auto stocks? To you, Milleen, Eicher Motors, an absolute stunner of a rally, 3,700 in front of you, the highest that we've seen since mid-June. What are the charts telling you? It's a rally which has now lasted the 8th day, 9th day actually.
No doubt, Eicher Motors can currently move more higher from current levels, but definitely strong charts on the daily chart, and we could expect a 7 to 8% move from current level. Keep a stop loss of 3680 on the lower side, and you could see in today's trading session, it could test the levels of 3750, 3780 going forward. But Shell, I would like to comment on one more stock in auto stock is that is Sharda Motors. If you see Sharda Motors have also given a strong breakout on the longer term charts. Now currently in this year, it has already moved up by say 64%, and if you check in last 3 trading session, it is making a higher high formation. One can accumulate at current level. You could expect a move towards say 1500 levels going forward.
Okay. Remember 3877 is the all-time high level for Eicher Motors as well. So we'll keep an eye out on that. And very, very quickly, before we let you go, Milleen, I'd like to ask you on the mid-cap IT basket. Stocks like Birlasoft, Coforge, Persistent, they're all coming up in trade again today. Your own sense of any of the stocks that you'd like to track here?
Yeah, I would rather comment on this two stock. One is Birla Soft and Persistent. Even
Okay.
Avinash has told that
Yes.
Persistence is good on the chart, and clearly they are the outperformer going forward. They are beating the benchmark indices and making a new higher high. At every dip, one should try to accumulate B Soft as well as Persistence going forward. You could expect a nearly a return of 20 to 25% from current levels also.
All right. Got that. All right, one more space where before we let you go, we're just getting greedy. But shipbuilder stocks, Great Eastern Shipbuilders is back in action today, about 2% higher in trade. Cochin Shipyard, about 0.4% up in trade as well. Now, this was a space that really widely outperformed the markets in the previous somewhat. Your own sense of the stocks in the fresh move, anything that interests you?
Even if you see GRSC. Now, currently it is trading sideways, but definitely we are keeping a good watch on it because earlier it had moved or made a high of say 1800 and 974, and from there nearly 7 to 8 weeks it is started correcting on the lower side. Now it is making a rounding base pattern. Once this stock starts trading about 797, if you could see again a good bump up in this stock, and you could see on much higher levels, and it could test the recent all-time high of 900 and even extend its gain further to 900 and say 1000 levels.
With that, Mileen, thank you so much for the time that you spent with us. And of course, we'll remember manganese ore, NCC, Canara Bank, and persistent systems from your quiver full of arrows that you pointed out on the technical side. Before we move and shift gears towards corporate radar, I'd like to mark the Infosys 1400 call that we had highlighted at about 17 rupees. You'll see how the traction has built up into the stock, into the option trade. It's at 19 rupees 50 paisa at this point of time. Let's see how it goes, and that's how you trap momentum in your favor. You do so for a very short interval, but looks like a swing trade in the making on the long side as far as Infosys is concerned. The call now at about 19 rupees. The day's high on this one is 19.5 rupees. Should it break that, then the momentum will again start on the long side. We'll shift focus and now move towards discussing the very strong earnings that have come in from an infrastructural giant called Thermax Limited. Mr. Ashish Bhandari, MD and Chief Executive Officer, joins us with his presence on Market today. And it's been a very, very strong performance coming in from Thermax. Remember, anything and everything that goes into the back end of factories, especially on the heat sustenance side, is made by Thermax. Mr. Bhandari, welcome. Good morning. How has the past quarter been, and how do the next 3-4 quarters look to you in terms of order book?
Very good morning to you and to all your viewers as well. And thank you for the kind words about our performance. I would just add that as a company, we're not just at the back end and not just in heat recovery solutions. Almost anything relating to energy and energy transition, from a capability set, whether it is heating, cooling, water conservation, air pollution management, variety of different solutions, renewables across the portfolio, Thermax would have a role to play in. In terms of performance, the last quarter was satisfying on some counts, and on some other counts, I would say we still have work to be done. The good part was, of course, the overall stability in the market that allowed us to put out a good set of numbers on revenues and on profitability. Yeah, which is a commitment that we had made, that we wanted to continue to take the business towards a more differentiating set of capabilities, which came with higher margins, and we are able to do that across all of our segments. And that, I think, continues, I expect, for the next 2-3 quarters as well, given the environment we are in. The challenging part is that some of the larger and some of the more L1 tender-based deals have relatively gone down. Yep, a year and a half ago or a year ago, especially in refining and petrochemical, we had a bunch of big opportunities. Those are no longer there. What I see in the market right now is still a lot of opportunity, but it requires a lot more discussions with customers, a differentiated offering, certainly not something that is tender-based. It is more driven by kind of proactive interactions, having an offering which is unique, bespoke, specific for the customer.
Okay. Very good morning to you, Mr. Bhandari. Sakshi this side. Good to have you with us. I wanted to discuss with you on your operational performance and on the margins as well this quarter. EBITDA is up 45.4% at 204 crore rupees. So a remarkable jump there on a year-on-year basis. The margins have also improved to 8.9% versus 6.8%. Help us understand, is this performance sustainable for you? What is the outlook for the next 2 quarters? And do you also see a vision for double-digit margins pretty soon now?
Look, I think double-digit margins will still take some time. I think if you take the last 3 years, almost every time we think we know what is going to happen in the future, and our predictions come wrong. Yeah, COVID, the wars, the recovery post-COVID, almost everything was tough to forecast. So what we are focusing on things we can control, which is our backlog, our operations, and making sure that we are doing justice to those. And there, I think I'm reasonably comfortable with what we have. Yeah, traditionally, some of the largest projects that we have had have also been some of our less profitable ones. As I look at our backlog, I think it's reasonably clean, which is symptomatic of the kinds of orders we have picked up over the last year to 2 years. Right now, I think in terms of margins, as you look to the future, I would say half of what we did this quarter will be sustainable. Half had some elements of one-time kind of things, specific projects that had particularly good profitability that got delivered in the quarter, which may be tougher to sustain. Not impossible, but tougher to sustain. So I would say half and half. Yes, some portion of our improvement in performance is targeted and driven by some of the actions we have taken.
Okay. So talk to us about, your CapEx plans when it comes to renewable power and your electrolyzer production, which you had recently got into, and how, big a portion as a revenue contributor is this segment going to be for you going forward?
Look, overall, from a CapEx perspective, we will be in a mode that I think over the next 2 to 3 years to build new capabilities, we will be investing. Yeah, whether it is electrolyzer production or whether it is something else, that you will have to wait and watch. And this is not just in terms of some of the newer things that we do. Even in our traditional businesses, we're just adding a new plant for our water business. We will be expanding capabilities and production on our chemicals business as well. So we continue to expand in our traditional lines, but even in some of our newer capabilities, we see a lot of room for doing new things. And that comes across as technology investments, partnerships, new manufacturing capacity, all of these things. So the next 3 years will be CapEx heavy. One particular area where CapEx will go, and it is already going, is investing in our renewables business to put together a platform for delivering hybrid renewable power to our customers, CNI customers. That's our focus. And whether that is in terms of solar, wind, or whether it is in terms of renewable and biomass-based steam or power, both of those options we are very, very open to. And both of these platforms, we call them TOSL and FEPL, continue to ramp up and expand for Thermax.
Mr. Bhandari, let's focus on two spaces, green solutions and chemicals. You've set up a B2C chemicals plant at Dahej. Any feedback in terms of how capacity is improving in terms of utilization in this particular space? And then green solutions. Let's look at that too. The entire industrial conglomerate of the Indian corporate sector is moving towards green solutions. How do you see these two sectors, which are fairly new to Thermax, contributing to the top and the bottom line over the next 4 quarters, sir?
Look, first, chemicals is a relatively very old business within Thermax. Some of the focus and the growth aspirations in chemicals are renewed in that sense. Our new plant in Dahej, which is not B2C, it's all B2B. There's very little that Thermax does, or practically none at all, which is B2C. On the chemicals front, we are continuing to invest, continuing to grow, not only in the lines that we are in, but increasingly in adjacencies as well. The plant in Dahej is about 70% capacity utilization now. It took a little bit of time to stabilize, but over the next year and a half, we expect to reach 100% capacity, at which point the next capacity, which is already in play, and a new plant which is under construction, will come online. Chemicals, we expect to be a long-term growth play for Thermax, where we expect double-digit growth and double-digit profitability for at least the next 3 to 5 years. Here we expect to continue to invest and continue to grow this platform. Green solutions is another area which was a smaller part of Thermax, but both TOSL and FEPL, which together are probably 400 odd crores within Thermax right now. In the next 3 years, I expect them together to be more than 1,200 crores, somewhere in 1,200 to 1,500 crores, and be a bigger part of Thermax and continue to be a big part of Thermax for the next decade. And this is because our customers are asking for these differentiated solutions, whether it is biomass-based steam or power and adjacency-related solutions. We have a unique set of technology capabilities, offerings. We are going deeper and deeper into the supply chain. And many of our customers are open to paying more for some of these solutions than their coal plants or otherwise. So we see a big change in the Indian market in terms of openness to some of these newer solutions. Similarly, on the renewable side, almost every company that I know, including ourselves, we are very, very hungry for renewable power, knowing that some of our the biggest portion of our carbon footprint comes from electricity, and that a good chunk of that electricity today is based on fossil fuels. And over the next few years, we want to take as much of that electricity to renewable as we can. And so we ourselves are looking out for green power for our own plants, and we know many of our customers are doing the same. So we are offering these solutions to our customers, wind and solar for now, but increasingly storage and overall hybrid solutions. Over time, we expect to take this to hydrogen and some of the newer applications as well.
Okay. Mr. Bhandari, would you also be looking at, inorganic opportunities, if any, for the next leg of growth? Any acquisitions that you are already having on your radar? How do you plan to deploy the cash on your books, sir?
Look, our deck is reasonably active right now. We will be looking to make moves. We will be very conservative in terms of industries and valuations that we are targeting. But that said, we do realize to add new capabilities, we will have to be active on the M&A front. Let's wait and watch, but this is something that is part of our plans as we look to the future.
Right. Mr. Bhandari, a bit of views from your side on the industrial products segment. Of course, that's the largest chunk of your business, contributes substantially to the order book and has been the mainstay of both the top line and the bottom line. India is supposed to be in a fabulous capacity expansion cycle. When you look at your contributors to the order book, where is the maximum demand for your products coming from?
I think the best part of the growth over the last 3 years has been that we have been sector agnostic. And it has been a beautiful part to just watch. And our industrial products is a good example of that, because our industrial products sells to every industry that you can think of. Yeah, we sell, of course, to steel, cement, some of the larger industries out there, but then also to textiles, to rubber, to tires, to the agro, food, pharma, chemicals, variety of different industries. And almost quarter by quarter, we have had different segments coming in and leading. Yeah, and the sectoral shift has been moderate. But if I look at a 2 to 3 year period, almost all of these sectors have grown substantially. And our industrial products is where some of our most profitable growth has come from. Yeah, the business is practically double of what it was from 3 years ago. And we sell through more than 120 distributors and channel partners across the country, beyond just the direct business that we have. And across all geographies of India and across all segments, we have seen very good upticks if you take a consistent period of time. I think if you take quarter by quarter, the sector shift, right now, I would say steel has done well, edible oils, some portion of commercial has done reasonably well. But if you take a year and a half kind of a picture, almost every sector has done very well. Yeah, which I think is, again, an example of India's broad-based growth over the last couple of years.
Right. And with that, Mr. Bhandari, we'd like to thank you. Very few people have had the pleasure of watching Thermax grow over the last 25 to 30 years. And I am one of them. I distinctly remember the IPO that Thermax launched in 1996. Mr. Agha was at the helm at that point of time. And it's done a fabulous job in setting up the backbone of India's industrial might. If you look at the 10-year CAGR on Thermax, that's 16.7%. It's outshone a lot many indices and a lot many of its peers. Mr. Bhandari, our best wishes to you, sir, for a fantastic couple of years ahead. Truly, we are in a Goldilocks moment as far as the Indian corporate life is concerned. Thank you for your time, sir.
Thank you very much.
And with that, Sakshi, the show draws to a close. And I'd like to mark the 1400 Infosys call that we had picked up at 17 rupees. I need to pinch myself. It's at 22.95. And that's how you pick up options trades. Remember, it's a 5 rupee move on a base of 17 rupees. And if you look at how the stock is now, as far as cash markets are concerned, somewhere like 1405 is the price that I see on Infosys. 1408.60 actually. The one that you see is the cash price. The futures price is trading 5 rupees premium to cash. So that is something that you need to look at when you look at the options chain for Infosys. At the moment, it's doing pretty well. The other thing I wanted to mark on Infosys was the lot size. The lot size of Infosys is in front of me, and that is, ladies and gentlemen, just a moment. Infosys lot size is 400. So this is something that you can look at. It's a very good move coming on the long side as far as trades and indices are concerned. 19,636 in front of you, 129 points higher, 193 points higher on the Nifty, and 400 points higher on the Bank Nifty, 44,277. 19,800 on the Nifty is on its way, as also is 44,500 on the Bank Nifty. Sakshi.
All right, markets doing very well. All the sectoral indices up into the green, led by the realty space now, which is up 3% in space. So the realty stocks are picking up momentum. IT stocks follow, and the metals shine bright as well, apart from the broader markets and the banking space. Top gainers at this hour include Hindalco, LTI Mindtree, Tech Mahindra, ONGC, JSW Steel, and Infosys. And however, there are few and far between stocks. Some of the stocks that are still lower. So Sun Pharma, Britannia, Power Grid, Nestle, these are the stocks that are still dragging in trade. We'll wrap up the show right now, but we'll continue to watch out for market trends even going forward from here. So do stay tuned with us on Business Today TV to catch all the updates from the world of business and stock markets. Thanks very much for tuning in.